What's going on? This your boy DGS Invest, and today we're going to be talking about market structure. All right, I got a little example of market structure on the screen right now, so let's just get right into this. I like to get right to the point. All right, so when you looking at market structure, this is the perfect way to identify trends. All right, when the market is trending, it will make an impulse and then it'll correct itself, and then it'll make another impulse correction, and then an impulse, and then another correction for another higher low. The second impulse has to break the last higher high for it to be considered an impulse. So let's look at this. On the 4 hour, this is what the higher high is, and then it will create a higher low, and then it has to break this right here. If it doesn't break it, say it stops sorry about that. Say this stops right here, it doesn't create a higher high, and you'll be looking for a potential reversal to go back down, and then you'll look for it to break this, and then retest, and then but in this uptrend, this is how it looks. So this is on the 4 hour time frame, but each of these legs on a smaller time frame, on the hour time frame, looks like this. Is creating another market structure of impulse, correction, impulse, correction, impulse. And for the correction on the 4 hour, on the hourly, this is what it looks like. Impulse, correction, impulse, correction, impulse, correction. But these are, when you're trading a smaller time frame correction from the higher time frame, you got to be careful, because you don't know how far down it's going to be, how big the correction is going to be. So you want to trade with the trend. If you're in an uptrend, the safest way is to only do buys. After the pullback, you look for a break in market structure, and then you follow the trend up. And then once it starts to pull back, you get out of the trade. So on the hourly time frame, this is what each of these legs look like from the 4 hour. But on the 15 minute, this is what it looks like. So on the 15 minute, it does the same thing, but this is a low on the hourly. This is a low on the hourly, and this is a high over here. You look where it doesn't create a higher high, and it breaks, and then it retests, and then you enter right here. The market structure: always wait till it breaks the last lower high, and then retest, and then catch this coming down on the 15 minute. This is a lower low on the hourly, and it's gonna correct itself, and then continue going past this lower low and creating a new lower low. On the hourly, this is a lower high. So that's a market structure in a nutshell. And even on the 1 minute, it will do the same thing. Each of these will have its market structure. So let's take a look at the real chart. If I can find it, right? No way. Alright, so right here, I'm on the 1 minute chart. Let's look on the daily, right? Ooh. is always and forever uptrend. So let's make another chart. Okay, so right now this is in a downtrend. So on the daily, this is the high, and then it creates a lower low. And then it creates a lower high, and then it creates a lower low, and then another lower high, and then it goes past the last lower low. Now let's look on the 4 hour. Let's see what it does. So on the 4 hour, you see it going down, up, down, correction, down, correction, down, correction, and now, and then it breaks structure. You see? In the hourly, it'll have the same structure. In the hourly, it'll have the same structure. But on the higher time frame, you know you're in a downtrend. So if I was you, I'll be looking for sales. Once it gets to a higher point, look for sales. So that's basically market structure. It's always making impulses, correction, impulses, correction, or impulses, correction, impulses, correction. Find the trend and ride it. Ride that wave. Alright? Don't forget to like, comment, and subscribe. Thank you for watching. I'm out.